Welcome to Markets Now. I'm Michelle Rook along with Jim McCormick, AgMarket.net. A lower day on Thursday in the livestock futures, grains mixed. And Jim, let's talk about soybeans. First of all, we've been up in the upper end of the trading ranges here in soybeans. So, was today just a setback because of that, or was it because of the risk off that we saw in some of the outside markets?
There's a couple things. Technically, you're getting up near resistance levels, or producers are getting a little bit more aggressive selling grain. But I think the big thing is risk off. Outside markets are down. China has become a little bit of a concern. They've been at zero risk, obviously, for COVID, essentially stomping it out completely. They've gone from zero risk to, I call it 100-mile-an-hour risk. They're pretty much seeing a problem. A lot of reports are, Michelle, that their trading desks are not even fully staffed due to how vicious this is spreading. And we kind of saw this in the United States last year when we had this Omicron variant. You saw a big swell of a lot of people getting sick, and then it kind of died down in 4 to 6 weeks. And my guess is that's what's going to happen as we get through the Chinese holiday here in January, their New Year's holiday. It'll tap down. But I think the market's just a little bit concerned about the demand prospects, at least near term. And then on top of it, reports are today that China's already bought 75% of their Jan-Feb needs. So that's also a little bit of a red flag on the demand aspects for U.S. beans.
We did have a strong export number today, 108 million bushels on soybeans. And so you think, is that kind of the high water mark? We're going to start going the other direction now.
Right now, I would assume we're going to start going the other direction unless the weather really takes a turn for the worse in Brazil. Northern Brazil is doing pretty well. Southern Brazil is a little bit of a concern. But right now, I think the Chinese are going to be trying to switch their demand over to the Brazilians. And that traditionally is what they do this time of year, move to the South American origin.
And we have put weather premium to the soybean meal market because of the dryness in Argentina. Do you think we have enough premium put in there now?
I think at the moment we've probably got enough, but if they continue, at this point we haven't seen a massive shift in the meal demand. If that meal demand continues to build because Argentina cannot fulfill the world's demand, that should bring that market up. The other thing I think fueling that meal, Michelle, has been there was a lot of money, and I mean a lot of speculative money that was long the bean oil complex and short the meal as a spread on the optimism of biofuels and some of those prospects. When the EPA came out recently with their new objectives for 2023 mandates, the reality is we're just not seeing the government push for the biofuels as much as what the trade was thinking, and we've seen just a massive unwinding of that spread, and that's also fueling that meal market. So you got a demand-driven market due to the meal shortage out of Argentina probably, as well as just the funds getting caught short the meal.
Yeah, and they were record long in the soybean oil, so they reversed that for sure. So what about corn and wheat higher today? Wheat was kind of the leader. Was that technical, or was that us putting some weather premium in?
A couple things. Technically, we've been a little bit oversold on the wheat. Weather has become a real concern, I think, near term. I know we are in dormancy right now, but we are seeing some of the coldest temperatures that we've seen all year long coming in at us going into Christmas time. So that's causing a little bit of short covering. Corn, I think, was a little bit more of a follower today, but we did get some decent corn sales for the first time in a while, so that's a little bit exciting. This is a time we should hopefully start seeing some exports pick up. Just like in the meal side, Argentina is a big exporter of corn. If they cannot fulfill that demand, or the Ukrainians can't get the corn out due to logistics issues, which I think could become a problem due to Putin kind of trying to destroy the infrastructure, that hopefully would drive some more demand to the U.S.
But corn pretty range bound, and we should stay that way maybe through the end of the year because of the holiday lightened trade, or not?
I would look for more of a sideways trade in all these markets. I mean, the reality is it's been a very volatile year at this point in time. I think a lot of the traders just want to wind down. The funds have kind of know where they are tax-wise for the year, and they tend to not make big moves. But one thing I want to make a note, Michelle, this also may be a time where producers, if you want to be a buyer or a seller, you may put what we like to call the wish orders in. Because when you get thin holiday trade and you get a fund that essentially does something stupid, plain and simple, and puts too big of an order in, it may push the market more than it would under normal circumstances, and you may be able to get a trade off or a hedge off that you normally wouldn't get.
Well, I'm still waiting for that to happen in the wheat market because the funds are so darn short there. All right, so let's talk about the cattle market. A setback today, are we just consolidating, or again, was that from the outside market, the risk off in that Dow again?
The cattle market is kind of, I think, Michelle, building a really interesting situation. Today definitely was a risk off. The Dow was down almost 1,000 points at one time. what's going on. The Fed came in, they raised interest rates pretty much as anticipated. But the big thing that came out of the Fed meeting yesterday was the pivot. Everyone's been talking about the pivot, which essentially, folks, is what they mean is they think we're going to raise rates now. And by the time we get to the latter half of 2023, they're going to start cutting rates. That's traditionally what happens. But we're not in a traditional market. The funds, the Fed's fighting this this high inflation. And Powell came out and she said, I'm not going to do the pivot. You get the market's thinking, and it seemed like slight delayed reaction, but now the market's realizing the higher interest rates are here to stay, unfortunately, and that's going to be negative. Because remember, this is what they're trying to do. They're trying to slow down the demand for goods, and this is how you do it. You make it more expensive. Now, if you're a producer, it's going to get a little bit more expensive to borrow money, so your operating note's going to get more expensive. But that's going to be a fear that's going to drag, at least near term, be a kind of a negative drag on the beef market.
Yeah, plus we had lower boxes again, and I think cash trade in the South was steady. I don't know if that was a little disappointing as well for the trade. What about the hog market? 2-month lows again here today, but a lot of it seems to be that we can't bottom the cash on the cutouts.
You got it. The cash and cutouts continue to bleed lower. That is keeping the market from trying to put a bottom in. Export sales this week were nothing too great. Traditionally, maybe you look for China to come in, maybe buy some hogs as they ramp up supplies going into the lunar holiday. Like I said, with COVID ramping up, unfortunately, the fear of the demand's not there. So the hogs right now are just searching for a low. What they're really searching for is demand.
Okay, well, hopefully we'll find some sometime soon. Thanks so much for joining us, Jim McCormick, agmarket.net with Markets Now.